everyone. If you're in the restaurants, real estate investing, or trucking industry, this live is especially for you because these are considered risky industries by lenders, but that does not mean you cannot get funded. I've helped these business owners and industries obtain up to $750,000. In some cases, no documentation. So listen up, this live is especially for you. So why are these industries are considered risky? This is just by traditional banks. Your traditional banks will be like Bank of America, Chase, Key Bank, things like that. They have stricter underwriting rules, but you have subprime and alternative lenders that have private lenders that understand that they understand that you run into a few issues, okay? So if you have a late payment or something like that within the 12 months, that they will still look at the overall situation and still fund you, okay? So why these industries are considered risky? Let's start here because this is where people get confused and they need you to be very, very clear, all right? Lenders look at cash flow stability, industry failure rates. For instance, trucking got on the do not fund list due to COVID, right? It was a huge thing that was going on during COVID. We had a bunch of truckers, and then a lot of those people during that time period started to default on their loans. So they made the risky lenders list, but guess what? They're back. So alternative lenders are lending back to you. So if you need to buy a truck, you need equipment financing, things of that nature, hit me up, okay? So industry failure rates, asset depreciation, and seasonability. All right. So you can find yourself on that list due to cycles and historical data that cause issues in that industry, and they will then deem you risky. All right. So real estate, trucking, and restaurants, these are the most risky. So if you're in this industry, food industry, trucking, restaurants, this is especially for you. But if you have any other business, of course, I'm funding you all. So real estate, trucking, and restaurants check a lot of those boxes. Everything that I just said on that list, all right? They have cash flow stability issues. They have industry failure rates and asset depreciation, all right? But here's the key. You do not get denied because of the industry, guys, all right? So you get denied because how you file and structure. That's another thing. Here's number one, the way that you're naming your business. You're putting your industry name and your personal name sometimes in the business name. Here's key, and I want you to keep this for your notes. Highly important. I'm going to say this every day until you get it, until I stop seeing people do this. Your business name does not need to be the same name as your company name. Your restaurant name, your trucking company's name, your real estate investing name should be a doing business as name. Your name itself should be like an acronym of some sort, just ventures. So example, AKC Ventures, Solutions, Enterprises, Global Management. That's it. All right. Your doing business name as AKC Trucking Company, Rogers and Sons Beef Jerky Restaurant. That's your DBA. Your company name should be structured for funding. This will save a lot of you a lot of problems and a lot of denials, all right? So common problems, inconsistent income, especially investors, real estate investors. I come from the real estate industry. It almost landed me homeless, all right? That's why you're talking to me, okay? This is why I'm talking to you. So too many properties and personal name, that's why you're talking to me, okay? That's what happened to me. I did not structure outright. You want to get trust. You want to get holding companies. You want the holding company to then own the LLC, all right? I'm telling you, highly, very simple. This is something I can do in one sitting in 30 minutes to an hour, online, all right? Be informed, all right? High utilization on credit. The reason you have high utilization is because you don't understand that funding is available to you. All you need is strategy and structure. Startup companies can get anywhere from $50,000 to $150,000. Easy, no documentation. All right. You do not need to use your personal name to start a business, all right? Lack of business structure, I just mentioned that. So the truth is, traditional banks want W-2 stability. Most investors don't have that, all right? We're taking losses at the end of the year. But alternative lending and private lending and subprime lenders who I have access to, they don't care about that. They're looking at what's coming into your banking account over the past 4 months. They don't care that you took up all your losses and you're operating in the red for tax purposes. All right, they understand. Why should we penalize you for taking your tax cuts? That's actually ignorant, okay? Well, it's not ignorant. It's just, let me say this. It doesn't make sense to us. And so when we go to the bank and they ask to see your W-2s and your taxes, and you're operating at a loss, and you know you're bringing in $250,000 a year, or you know you're bringing in $150,000, but you and your tax guy just took your tax cuts at the end and you get denied. Crazy. So fix and flipping, right? So you got business lines of credit. Here's the funding solutions for you, right? As a real estate investor, you have business lines of credit available to you. Fix and flip, DSCR loans. DSCR loans. One day I'm going to come on here and just talk specifically about that. Look that up. Equipment financing for rehab tools. So what works? Clean bank statements, 3 to 6 months. You want like a consistent amount of income coming into your banking account for 3 to 6 months. That's it. All right. If you're looking good, you're bringing in $10,000, $20,000 consistently, and they just see that bottom line in those deposits. Guess what? Qualified. LLC or corporation set up properly, filed with the Secretary of State, named properly, showing rental or deal income, okay? Show your rental income, have your rent roll or whatever you may have to show evidence of income coming in. That's it. So if your credit score is 650 or higher, you can qualify for business line of credit, or for working capital, or for equipment financing, right? Even with equipment financing, your credit score can be even lower than that. So you can have the money you need for down payments and you don't have any gaps. And if your credit is lower, we can still structure funding around your deal. Why? Because a bank will give you funding for 3 reasons. They'll give you money for your credit, your personal and your business. They'll give you money for your cash flow, as long as those bank statements within the most recent 3 to 6 months are showing good and healthy deposits, or they'll give it for collateral. And that's where it gets good, because now it's not a unsecured loan, it's a secured loan because it's backed by an asset, a piece of equipment, anything that has a serial number attached, okay? So now with the trucking industry, I want to point out, I have a call in like 4 minutes, so let me hurry it up. Do not fret. All right. So this is the time to give funding while they're still giving money out. All right. If you want to see how much you qualify for, all you need to do is just message me. We can hop on a 15-minute call, do a soft pull pre-qualification, have a conversation. Depending on what the funding is needed for, more than likely you can get it. If you have assets, okay, that you can put up, or you're going for equipment financing, your credit score can be a little lower. If your credit score is at least 650, but you have just few minor credit issues, we can still get you funding. If you have high credit card utilization, I can get you funding, all right? I got someone last week had like a 73% high credit card utilization, and we got him $200,000. I'm just saying, all right? So, common problems in the trucking industry, one of the most funded industries when structured right. All right. So when you're structured out right and you name your business properly and you structure it out properly with a holding company, then an LLC, and it's named properly, and you're going after assets like to buy a new truck or a new piece of equipment, that is asset based. I can get you funded. So new authorities under 6 to 12 months, high expenses, fuel maintenance, inconsistent loads. Here's some of the problems and personal credit challenges. All right. The good news is trucking is asset heavy, so we can get funding, which lenders actually love. Okay. So your funding options would be equipment financing, and that's for truckers and trailers, business lines of credit, fuel cards, plus working capital. Key advantages: equipment financing is asset based. I mentioned that before. So your credit score can be lower. The truck itself secures the deal. All right, just know that. So even if you're not a 650 credit score yet, you can still get funded. DM me, let me know how much you want, and we'll work on that. At least after having the call, you would then know what will need to happen in order for you to become funding ready. All right, let's put ourselves in position. Now, let's talk about the restaurant industry really, really quickly. Restaurants are another very high risk industry, okay? But they can get funded as well. So high failure rate statistically, cash heavy businesses, tight margins, seasonal dips. What lenders look for are daily deposits, consistent revenue, and time in business, okay? So your funding options will be a business line of credit that you can draw from when you need it, okay? We are able to get you up to $100,000 to $200,000 if you're bringing in at least $17,000 a month or more, and your deposits show that. All right. So equipment financing, ovens, refrigerators, working capital, business lines of credit. All right. So business lines of credit versus equipment financing. Let me break this down for you, and I'm going to read through it quickly because I have to hop off in a minute. So up to $750,000, no documentation, light documentation. Let me say that. You have to prove income. Revolving, you use it and then you pay it back, and it's back available to you. And you're only paying interest on the amount you draw down from, okay? Best for working capital, typical for 650 plus credit score. Or for his equipment financing, right? Equipment financing is based on the asset itself. Lower credit requirements are okay. All right, great for trucks, machinery, kitchen equipment. This is how we get people funded, even if their credit isn't stellar or perfect. And we're not going to Chase or Bank of America for this money. So lender requirements, like for a business line of credit. For instance, 1 year in business, 100K annual revenue, 600 plus credit score, strong monthly deposits. All right. And in some cases up to $120,000 annual revenue. That's it. And you qualify. All right, so today I would like to just put you on notice. It is Funding Friday. You can get funded with a 550 credit score if it's an asset-based type of loan you're looking for equipment, or 650 plus. If you're a restaurant owner and you're bringing in at least $17,000 a month, I don't care if you just opened your doors 30 days ago. If you made $17,000 last month, guess what? I can get you funded. All right, because you're meeting that requirement of at least $100,000 a year. You're on board for that. So be amazing, be great. Let's get funded. Hit me up. Let's just do a soft credit pull just to see how much you qualify for. I can help you with high credit card utilization, business line of credit, equipment financing. All right. And I'm also helping anyone that is looking to buy a new acquisition, so I can get you funded to buy a business. So I'm so excited to share this great news, because the traditional banks have been so tight that it's been so hectic, and people are not getting to their goals in their business. So I'm here to help you get funded, and I'm here to help you reach your personal financial potential. Once again, be amazing, be great.